They wound up delivering 241,300 vehicles. That easily beat the consensus estimates out there.
Now you have the chip shortage, and here's Tesla that's performing well through that, and Tesla that is getting cars out of the door in a way that other automakers aren't able to. I think this is a bit of a surprising development, and obviously a welcome one for the Tesla bulls.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, I'm going to be reacting to the media reacting to Tesla's blowout Q3 delivery bombshell. Like it or not, there are a lot of people out there who rely on the likes of CNBC and the Yahoos over at Yahoo Finance for their news and information as it relates to finance, the stock market, and particular companies. For those of you who have a very short memory, it was just a year or two ago the mainstream finance media almost universally was doing nothing but on Tesla over and over and over, buying into the FUD being spread from the basement dwellers of Tesla Q, suspecting the company was going bankrupt, making crazy and outrageous and false claims about Elon Musk, and just waiting until the company and its stock price collapsed. Well, spoiler alert, that didn't happen. When I started this channel almost 2 years ago, one of my earliest and most consistent predictions was that over the next few years, after Tesla continued to crush quarterly expectations over and over and over and over and over and over and over again, eventually the consensus opinion in the mainstream media and among Wall Street analysts would shift quite dramatically, although it may happen quite slowly, from Tesla is going bankrupt, Tesla is doomed, they're the worst company on the planet, don't buy the stock, to holy shit, Tesla is absolutely unstoppable. And so it's taken about 2 years, but I believe we're at a tipping point now where the mainstream finance media consensus opinion has finally shifted from Tesla is doomed, they're going bankrupt, to wow, they're actually executing exceptionally well. Now, I don't want to be too generous to the mainstream finance media and the Wall Street analysts. After all, it took a plague and a global chip shortage and Tesla continuing to destroy estimates and break record after record every single quarter for them to finally realize what was painfully obvious to others years prior. But they're finally waking up. So why does this matter? Well, as I mentioned earlier, there still are actually people out there who pay attention to these folks and take their opinions as gospel. They are admittedly the bottom of the stock investing food chain, but these people make up the vast majority of investors out there, sad to say. So as we watch through this video and see the media's reactions to Tesla's blowout quarter, just pay attention to the shift in sentiment and the way that they're now talking about this company that once was universally hated. And conversely, consider also how glowingly these same folks are praising companies who are yet to deliver a single vehicle. It's almost as if these folks get everything backwards, at least for the first few years, until what was painfully obvious to some eventually becomes obvious to them. It's almost as if they're inbred hillbillies, slow, backwards, and dumb. Did I say that? Is that offensive? Do any inbred backwards hillbillies watch this channel? Don't cancel me, bro. Anyway, the point that I'm getting at here is it seems as if the mainstream media may in fact be a contrary indicator when they first begin covering companies, at least for the first few years. I'm not saying this is always the case, but something to keep in the back of your mind. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
These were better than expected deliveries in the third quarter for Tesla. And when you say, well, how much better? Well, the street was expecting them to deliver anywhere between 220 and 227,000 vehicles in the third quarter. They wound up delivering 241,300 vehicles. That easily beat the consensus estimates out there. Just like in the second quarter and also in the first quarter, the priority was Model 3 and Model Y. 94% of the vehicles delivered in the third quarter were those two models. The supply chain issues, they did hurt Tesla in the third quarter. Elon Musk talked about it early in the quarter. They made mention of it in the delivery report. But the curious thing is that they've been able to manage the semiconductor situation far better than a lot of other automakers around the world.
So CNBS, they're giving some overdue credit to Tesla. Now, as I said in the introduction to this video, it took a global plague and Tesla still to navigate that seamlessly and continue to increase their deliveries quarter over quarter. About a year and a half ago, for those that don't recall, I said that was going to happen during the plague when everyone's panic selling their Tesla stock. I'm like, you do realize this is going to be a record quarter and everyone's going to realize, holy crap, they have way more demand than people realize. This was a great insight into Tesla's insane demand. Now, I hate to be that guy. Actually, I don't hate to be that guy, but I do just want to remind you folks that I was adamant that Tesla had far more demand than they were currently able to meet with their supply, and that they would continue to sell every single vehicle that they produced during this entire time when everyone was freaking out thinking it was the end of the world. It was already evident that Tesla had unbelievable amounts of demand for their products, but only evident to some. I also predicted that as a result of the plague and Tesla continuing to sell every vehicle that they made, more people would start to realize, wow, they really do have far more demand than they can currently meet. They really do have insane demand. This was a valuable hint, but it took more than that. It's now taken the knock-on effects to global chip shortage for people to finally start realizing, wow, there is something different about this company. You know what it is? They've got some big-brained engineers. They're an extremely agile, innovative, solution-oriented company. They're highly resourceful, and we can also see their software prowess coming into play. Tesla sourcing new chips and writing new firmware on the fly to keep producing vehicles. And now we see the mainstream finance media starting to acknowledge that Tesla has done an unbelievable, surprising job of navigating this global chip shortage. Listen again to the way that Phil phrased this.
But the curious thing is that they've been able to manage the semiconductor situation far better than a lot of other automakers around the world. So when you look at their full year deliveries, the consensus continues to move higher. It was 860,000 vehicles expected for a full year a couple of weeks ago. Last week, it was up to 878. Now the consensus on FactSet is for 838,000 vehicles to be delivered this year, or 883,000, this year from Tesla. That is the consensus at this point. Take a look at Tesla versus General Motors and Ford. Remember, EVs make up just 3% of the market, but in the last 3 months, Tesla has easily outperformed both General Motors and Ford. And again, while not as high as earlier today in the trading session, guys, the shares of Tesla are moving higher.
Fancy that. Analyst consensus estimates continuing to increase and increase and increase quarter after quarter as Tesla blows away expectations quarter after quarter. Now, why does that sound familiar? Kind of have a funny feeling, maybe I'm hallucinating here, but I almost think that I predicted that was going to happen. And you know what? Here's another prediction that is going to continue to happen quarter after quarter for years to come as Tesla delivers more vehicles than anyone expected was possible. It's not just going to be this quarter or next quarter. This is going to be a recurring theme quarter after quarter for literally years to come. Wall Street continues to massively underestimate Tesla, and even though Tesla continues to blow away their expectations quarter after quarter, they still make the same mistake and still underestimate the company.
The only positive I've seen in the market the past week is Tesla. I mean, those delivery numbers over the weekend were good, but I think more evidence that is a Tesla-specific story of a company that is operating very well, very efficiently, and is also an upstart automaker and doesn't have the same concerns as the legacy automakers do right now, GM, Ford, with the chip supply shortage.
Yeah, so that number that you see on your screen there, 241,300 was the vehicles, the deliveries during the third quarter. The prediction was about 220,900 to be specific here. So above what analysts had been estimating. You know what's really interesting to me, and listen, I have admittedly been a Tesla skeptic at times here, Saz, but what's so fascinating to me is who would have thunk that Tesla was operating well because of execution, right? I think even some of the Tesla bears out there.
Wow, it's kind of awkward. I mean, she is part of the mainstream finance media, so hey, I guess it's understandable. But imagine being surprised that Tesla executed well. By the way, it's 2021 in case you guys and girls are wondering. It just goes to show how completely and utterly disconnected the mainstream finance media is from reality.
Execution, right? I think even some of the Tesla bears out there, didn't necessarily question the demand for Teslas. They questioned Tesla's ability to get cars out the door. Of course, we all remember Elon Musk sleeping under his desk or wherever at the Tesla factory, the company operating out of tents, some of the challenges it had during COVID with getting people to work safely and getting the cars out the door. Now you have the chip shortage, and here's Tesla that's performing well through that, and Tesla that is getting cars out of the door in a way that other automakers aren't able to. I think this is a bit of a surprising development, and obviously a welcome one for the Tesla bulls.
Well, better late than never, right?
Yeah, look, they've been moving very quickly to rewrite software so they don't have the same problems with chips. Now, not to say that it's smooth sailing on the chip front for Tesla, but again, I think there's bigger problems over to GM and Ford right now.
Any long-term viewers of the channel remember this guy, Brian? Salty McSalton, just a few months ago, doing nothing but hate on Tesla 24/7, now giving them credit and recognizing they're doing a far better job at executing through this global chip shortage than the likes of Ford, going bankrupt later this decade, and General Motors, also going bankrupt later this decade. Just pointing that out once again.
And overall, I would say this, just going back to my bearishness that we were talking about in the brief, Julie, if Tesla came out about 6 months ago and hammered the whisper numbers on the street with its deliveries, I would argue would see Tesla shares up 10% pre-market. We only see it up about not even 3% here, which I think underscores the nervousness in this market ahead of a Tesla earnings, ahead of automaker earnings, ahead of any earnings report in a couple weeks.
So just for the record there, Brian, there is absolutely no reason for any stock investors in the market to be nervous about Tesla's upcoming Q3 earnings. They're going to destroy literally every meaningful record that matters. All of them. Revenue, profitability, net income, gap income, blah, 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 blah. All of them. So no worries there. But yeah, the other automakers, if you want to lump them together with Tesla, which is probably not a wise idea, yeah, it's going to be pretty brutal. I sure am glad I don't own any stock of any of the legacy automotive manufacturers, but then again, why would I? I'm not an idiot. Did I say that out loud? Yes. Do I mean that? Also, yes. In my opinion, owning any stock of any of the legacy automotive manufacturers today is about equivalent to having a few tickets to the Titanic. Have fun on your cruise, dickhead. So I hope you guys and girls have found this video insightful. As I said in the introduction, we're really starting to see the mainstream finance media sentiment shift as it relates to Tesla and Tesla stock. They're starting to acknowledge openly, wow, Tesla executed really well, even though they are a little bit surprised. And more than that, in contrast, they're starting to realize, wow, Tesla executed a hell of a lot better and is navigating this global chip shortage much better than legacy automotive manufacturers. They've finally got something to compare Tesla to, which is making things a little bit easier. And so the next big shift in sentiment in the mainstream finance media, of course, is going to be around legacy automotive manufacturers. Let me know in the comments below. How long do you think it will be? Months or years? Name a specific amount of time until the overall sentiment in the mainstream finance media in terms of legacy automotive manufacturers has shifted from, oh, they're making electric vehicles now, the competition is coming, to, oh, shit, oh, they're actually fucked. It will happen, but given their track record, it's probably going to take a little while. So let me know your guess in the comments below. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.